some of our audience might not be familiar with Maple Finance. So do you want to just give a quick intro on the company and sort of what you all do?
For those who are not familiar with Maple Finance, we call ourselves an institutional lender or an on-chain asset manager. Our background was doing loans to crypto native companies. So we do a lot of over-collateralized lending, and this can be to centralized exchanges, could be to trading firms, could be to funds who operate on-chain. But in each instance, those loans are over-collateralized, and this forms part of what we would call on-chain asset management. More recently, we expanded our product set so that we don't only have over-collateralized lending, we now also have a Bitcoin yield product. And so as a bit of a high-level snapshot, we have around 1.25 billion in assets under management on the platform at the moment. We run a loan book of north of 450 million, and then we have about 150 million in our Bitcoin yield product. But most folks on the team come from a banking or financial services background, and I'm no different. I used to do banking in Australia.
Yeah, I was just going to say, maybe a bit of tying your background into, sort of what inspired you to start Maple Finance. So as you sort of mentioned, you started in TradFi at a large Australian bank. I'm curious what lessons you learned from the traditional debt markets that inspired you to start Maple in sort of the early days?
It's a good question. So I spent multiple years in banking in an area called securitization. And so this involved helping lending companies to borrow. And so I'd say that was kind of the most important part of my career in banking, was that I saw how lending companies worked from the transactional side, and as a partner who helped them source funding. And really, that gave me a kind of view into the inner workings of how you build a lending company. And then from there, I actually wanted to go to more of a startup or a smaller, more nimble style of company after having spent, my early career in banking. And so I had an opportunity to go to a commercial lending company in Australia. And then I ran their treasury. And this gave me a different perspective. It's one thing to see a business from the outside. It's another to be in the kitchen seeing how the sausage is made. And so at that company managing its treasury, I had to put in place facilities. And then I was kind of involved in reporting. I needed to understand the business in order to talk to that company's financiers and the banks who are working with it. And that's where I, one, met my co-founder, Joe. And then two, we had the original idea for Maple, and it's changed a lot since then. But the original idea was, could we do tokenized bonds on chain? So something akin to securitization or what I've been doing when I was in banking. But the key insights from working inside those companies is the financial system is actually extremely fragmented. It's very opaque, even as a company that worked in the lending sector, to see kind of what goes on inside banks. And it was just very tough to scale a lending business. And so part of the opportunity set that we saw in Web3 crypto DeFi was you can potentially dramatically lower the cost and the barriers of entry to get into the space. And that was ultimately kind of what drew us to Maple, and then the idea of being able to do this programmably and automatically.
When you describe to folks what Maple does sort of under the hood, right? I mean, ultimately, this is, lending, right? So there's, sort of this process of originating, underwriting, and then managing, sort of the loan book, right? So as you think about maybe the supply chain, or I'll call it the value chain underneath the hood, how do you see that as it works at Maple, and like what are maybe the unique properties that you guys have innovated on?
It's a good question. I would say, just to boil it down to as simple a value chain as possible, I would say Maple acts as an intermediary. And what this means is we borrow from certain people. So these would include high net worths, family offices, funds, but effectively they want to pay us to provide them with yield. And they pay us by allowing us to take a portion of the interest that is earned from lending their funds out and keeping that as revenue for ourselves. On the other side of that, we have borrowers who want to take out loans to grow their business or for trading activity, or they might be an investor and they want to use some of the crypto that they're holding to buy a new position, or to pay for OpEx, something like that. But it's all institutional borrowers on that side of the market for us. And the type of lending that we do is not totally dissimilar to what happens in TradFi. It's just that we use different assets. We use cryptocurrency as collateral instead of using real estate or cars or stocks and bonds. And so what we've tried to do to make it simple and kind of easy to understand for people is, it's very important for us that we are transparent. So we put all of the loans on the blockchain. This makes it more visible to people who are giving us money, to investors who are involved, as well as to the borrowers, so they can see what happens with their collateral. So transparency is one of the first core key things. And then the other one is liquidity. So the fact that anyone can participate by using stablecoins from anywhere in the world, minus sanctioned jurisdictions, gives us a distinct advantage in speed. And so I read a lot of history and I kind of look at the history of innovation and new industries. And I think every 30 years or so, you get a new technology that comes along that allows somebody who's doing something that was kind of similar to what happened before, but leveraging the new technology to really run away with the prize. We saw it in retail when first Walmart started doing big box retailing. And then 30 years later, Amazon came along and started doing e-commerce retailing. And I see that our natural competitors in the traditional finance space are lenders like Apollo and Ares and Blackstone. And they have leveraged banks, like banking technology. And what we have an opportunity to do here is to use blockchain technology and stablecoins, which allows us to move faster, make our product cheaper for them, and attract users and customers from all over the world instead of only relying on those who are in the banking system of a given country. And so that's really how we sort of plan to disrupt and compete with those incumbents.